Hey, what's up, team? So I've mentioned this before. I will do video breakdowns on plays. All you have to do is request it. So this is a video breakdown on ticker AMZN today. There were multiple opportunities on this ticker to make money, both on the long side and on the short side. So I'm going to completely break down this play, and we're going to start from the beginning, talking about why it even made the watch list. So here I am on the daily chart, right? We always start our analysis on the larger time frame charts. This is a gap area. This is a gap in price where AMZN dropped from just around 2100 down to 2040. Okay, so gap areas on a chart on the daily and weekly chart time frames like to act as natural areas of support and resistance within the market. So I'm going to draw a line there. We can see that yesterday AMZN actually closed into the gap. That's what put it on my radar for today. So we were looking for, if this move were to continue bullish, continue upward, we were looking for this to get into the gap and start to fill this gap. We kind of got that pre-market. Let me go to the 5-minute chart. So we kind of got that move pre-market a little bit, but by open, we had started to sell off, right? This market gapped up, /ES was gapped up. I'll show you that in a second. But ultimately, you know, we wanted to see this hold. So understanding that gap areas are areas of support and resistance within the market. This being a previous resistance, we were looking for it to hold as support because old resistance becomes new support. So market opened. AMZN came down, tested this level perfectly, right? So we got this first red candle. That's not what we were looking for a gap play to the top side, but it's great that it was testing this area as a support. Then we get this candle right here, this green candle forming, and this is telling us that this is actually validating as a support. So around this time frame, I'm on the 1-minute chart, okay? Around this time frame, I have my trend line drawn like this, and as soon as we get that break over this trend line, 644 right here, I alerted this in chat to take it long. So let me show you what I'm talking about here. That was right here. Yep, 6:44 a.m. So on this candle right here. The next 3 candles printed green, and into this strength, you see this volume increasing right here. When we got that big volume spike, that push up to the top side, you always want to sell into strength. So that's why I said 2 minutes later at 6:46, consider scaling some off AMZN. That's 30%. I was trading today's expiration contracts, and that yielded 30%. Those move a little faster. But even if you didn't trade today, if you were trading next week's expiration, you still should have been up, you know, over 15-20% on this move. So always sell into strength when you get that type of move, okay? At this same time, the reason why I felt comfortable taking profits and getting all the way out of that trade right there, /ES was pushing up. So let's look at this. We're going to go to the 5-minute chart time frame. This was pushing up to this 2800 level. On the daily chart, that 2800 level was where this 50 EMA was at. And it's a natural, it's a whole number, right? The even numbers, 2700, 2800, 2900, all of those areas, look, 2900 act as areas of support and resistance, natural areas of support and resistance in the market. Whether or not we see it here, it's likely going to, you know, consolidate or pull back in this area. So I saw the market pushing up to this point, and it didn't make sense that we were going to have this wild run in the morning and just continue break out and keep going all the way up to the top side. It just felt like we were going to get a pullback at this time. So that's why we got out of AMZN at the time that we did. Plus 30% is always worth taking profits on. And on this candle here, okay, on this candle, the break of 2040, this was an intraday support. It was also the gap area. We're no longer in the gap area, meaning our support for the gap is failing, right? On that candle, on the 1 minute chart time frame, you don't need to look at the 1 minute to see that you could have shorted this. On the 1 minute chart time frame though, look at the volume on this candle. This is at 7:04 a.m. /ES. What is this doing at 7:04 a.m.? It's rejecting. 2800 is right here. I'll move this line up. It's rejecting the 2800 level, and this isn't just a pullback candle. Look at how big this red candle is compared to every other red candle throughout the day. With the exception of this one right here, this is the largest candle that we've seen. So this is more than a pullback, right? This is a rejection candle. So when that candle appeared and we're hitting resistance there, that's when I mentioned in chat right here, 7:04. Amazon could be a short play idea also upon the break of 2040. So we failed to hold 2040 right here. We even got this pullback candle that was testing this as a resistance, right? We always don't chase the move down. Wait for a pullback. So this was our pullback right here, testing this area as a resistance. And then there's the drop again. And then there's the drop. After that, the rest of this trade is pretty much history. You know, if you took that trade short when this 2040 level failed, you take profits anywhere here that you want. That was easily, you know, probably a 50% move right there. Where could the bottom, you know, who knows where the bottom could have been. I thought it was going to hold at the pre-market lows. It didn't, so it sold off even more. I'm assuming it found this support probably based off of this bounce here and then this little bit of resistance here. So this is why it's also important to have, like I say, trade on the 5-day, 5-minute chart time frame, because you can see these most recent areas of support and resistance. You know, 2020 may not be a significant level overall, but in the past week, it has been fairly significant. We can see it was resistance there, support here, resistance here, and support there. So when we sold off, it acted as a support. Now, from this point, you don't necessarily want to be trying to take this long, pushing up, right? Because the overall trend is down. We don't want to fight the trend. We're not trying to catch the bottom. Wait for this to pull back and hit this 2040 level and treat it as a resistance, and then short it again. I mean, I think this trade is so simple. Let's go to, I stopped trading right around this point. So 744. I said, considering another short position in Amazon here with the market at recent resistance and 2040 being the gap area. So back into this area, it would have been starting to fill the gap again, but after it already failed to hold it as support, it's testing it as a resistance. The market at this time was testing 2800 level as a resistance again. Rejection. Got another rejection and sell off here, and so Amazon followed suit. It rejected this level and sold off. Now, at this point, you could have tried to catch the bounce because you would have had a double bottom pattern setting up. And so that is where you have, it looks like a W. So you have an initial sell-off and then a smaller rally in the middle right here. Your double bottom is this point, and that will hold as a support. So your long entry could have been there. You would have known to take profits from your short in this area at the low of day and could have flipped it long here for the move back up to this resistance point. Same thing over again. You know, it hit this resistance point, failed, pulled back a little bit this time, ultimately failed again, and that could have been a third short entry on this play. And even if you wanted to take it long off the bottom over here, you probably could have done that too. This is why I say that sometimes less is more. You know, we don't need to be watching 7 tickers at one time. If you get a setup like this, this thing could have been traded 1 time here, 2 times on the short, 3 times on this short, 4 times on the long, probably 5 times on this short. Probably could have shorted it again for a 6th time and taken it long again for a 7th time. You know, no need to sit there and trade that all day. But if you came in halfway through the trading session at 8 o'clock, you know, no reason why you shouldn't have been able to catch this long entry. Anyways, guys, I hope that this video has helped you out some. Less is more when you're trading. You know, I really think that it doesn't need to be so difficult all the time. And this is just based off of price action. I'm not even using my indicators or anything at this point. You know, I'm not looking at VWAP. I'm not looking at my EMAs. They're on my chart for reference if I need them. But, you know, overall, I'm just looking at the support and resistance levels, the gap levels, the gap area, and the overall market, ticker SPY. It's always super important to have that pulled up. When you're trading these large cap tickers, you need to be looking at the overall market and have SPY pulled up, have /ES pulled up when you're trading, because sometimes, you know, if a significant move happens, your large cap stocks will follow suit. All right, guys, like and subscribe if you haven't already, and I'll see you in chat.